Welcome back, everyone. This is the weekly performance report. Noticeable activities over the last week. I bought more Grown Rogue Friday. Topped off my position a little bit. Nothing too large. Then it's been another trash week for me as I continue to bleed out my gains. All the while, the S&P keeps making gains. December should turn out to be either my worst or second worst performing month. I ended the week down 1.61%. So I think, I don't know, here's my positions. Like I said, I didn't add anything. More red than green. I'm still up on the year. I think, I ended November up 13.88%. I think I'm now up like 7% or something. So I guess that's better than T-bills. Talk about what is it? Diminishing returns for my time and effort. Maybe if I was managing millions or billions, you could say squeezing out a couple of percentage off of that. Between T-bills and let's just say 7%, 5% to 7%, it's 2%. If I'd multiplied that over millions, it'd be worthwhile. But anyway. As I keep on bemoaning the state of my YouTube channel, which to some extent is what it is, but it's just the whole shadow banning thing really just irritates me, and it makes me. Some of you subscribers actually like to listen to me ramble about this or that, or actually analyze companies or stocks or the markets, or perhaps even the more philosophical or psychological explorations of dynamics and topics. But it really just, I don't know, it just pisses me off that. So I've grown this channel 5 subscribers in the last 30 days. And yet my Substack has grown 25, 26 subscribers over the last 30 days. I mean, that's absolutely absurd. And you could say that, my content did change roughly the same time that I started taking these screenshot videos of the Substack channel. But the viewership just drop off. And I've heard other people say that they're really cautious about blanking out, not saying certain words, as well as blanking out certain words, such as cannabis or such as Substack, when they're making their videos, because they also notice that they get a hit to their viewership. And I suspect it's still going on. Twitter is the same dynamic. Twitter, if I put something in my posts about Substack, then that hurts who can see it, and the viewers get throttled on that too. So whatever. With that said, I'll end that session of complaining. I will note that, more and more, I guess I'm getting my thoughts out. I'm trying to engage more on Twitter and talk to people and shout out into the universe. So I would recommend following me over there. And what was I going to say? Banks. I've been looking at banks. Different kinds of banks. And normally the first thing I think to myself when I get some new idea is, why do I have this idea? Just like years ago when someone asked me about Bitcoin, I'm like, well, why are you even talking about Bitcoin? Like, not the question shouldn't be should you or shouldn't you buy maybe that is a question, but shouldn't be should you buy Bitcoin? The question is, why are you talking about Bitcoin in the first place? Because what you'll notice is, especially for those who are on Twitter more, is there's this undertow or this subtext, even though it's literally all in text, about certain stocks. And then next thing you know, you start looking or thinking about this stock or that industry that the stock's in. And then, or maybe some topic, a cocktail party you're having is about how value stocks are underperforming more than versus growth stocks in history or in the last 10 or 20 or 30 years, just fill in the blank talking point. And then it's like, well, why are you talking about that? And one of the answer is because you've seen it on Twitter 50 times and subconsciously it's imprinted itself on you, and now you're thinking about it and now you're talking about it. So the same dynamic goes with banks. Now, I can't track it really to anyone or anything. Matter of fact, I've actually gone out of my way to be looking at banks, and I really haven't followed anyone on Twitter who really talks about banks until the last week. And so it's not really that. And it all begins, I think, with, well, I saw somewhere a few weeks back, I think it was because of the Trump trade or something like that, how banks, the first time banks really came into my thoughts, other than, I think it's CCB, I think is the ticker symbol. I've kind of looked at that on and off and never did anything with it much besides watch it go up a lot over the last year. But other than that, there's really been nothing about banks. And then, except that comment, and then that comment's really stuck in my head. So then I had to have started looking at banks to see how they've been performing, and then I've just been thinking about banks because I have been for, this be a month now, over a month, 1.5 months, and then the next problem is well, maybe I'm looking at, not only have they had good relative outperformance in regards to other sectors, but also just a good absolute performance year to date as well. And so it's like, why am I looking at banks? And then it's dangerous because then you look at all these bank charts and they're all up. So then that makes you want to buy stuff, FOMO or this or that, or you're like, oh, wow. And then, like, just because it did that in 2024 doesn't mean it'll do it in 2025. And then I also realized that a lot of industrial stocks have just been smashed. Shipping stocks, as someone commented that I never replied to for one reason or the other, shipping stocks have been smashed. And then there's a lot of things that got smashed hard that I had no idea last time I looked at them, whether a few weeks or a few months ago they were seemingly doing well, and now they're just garbage. TRMD, TORM. Let's see if we can look that up. TRMD. Yeah, so we have TORM year to date. Look at this. This thing, it was doing well enough. Oh, up almost 30%, kind of stayed in this channel. And then in October, it has taken a shit. Now it's down 36%. And then I do GLGP. Nope, I don't. I can't. Oh boy. I cannot think of the, I don't know. But then you have Sting. This thing's been hammered too. It's down 20% year to date. Same thing. And there in about October, bam. And those are then Zim, which I made some quick money on at the very end of 2023 or the very beginning of 2024. Year to date, it's actually done well. I've seen this in my feed from time to time, up 95%. But then if you look at the larger chart, I think they actually came out of bankruptcy. But I remember that one guy really talked about it, and it shot up, let's call it 471%, and then it pretty much retraced it all. As you can see, it's up only 81%, but at one point it was actually below it, down by 36% in late December of 2023, which is when I bought it, and then essentially got lucky. I think it was the end of 23 is when I traded it, took a swing position. And then, had I held it, I'd be up 100%, but I didn't. I sold it for 50% or something. And so you got that going on. And I really don't have too much more to say about the banking. It's just more the dynamic of why am I thinking about banking? I haven't thought about banking since March through May of 2023 when I wrote collectively 4 different articles on the topic. And so it's a year and a half has gone by. Never thought about banking, and then now I'm thinking tons about banking. Just interesting. Now I did look at banking, not banking, but the buy now pay later dynamic. I tried to dive into that, and then it was like Affirm and Square, and I was like, I just didn't like what I was seeing. Plus, I didn't know what I was doing. And then Pagaya, which isn't quite the same dynamic, but the financials, broader financial realm. And then I believed I held Pagaya for a while. Believe I sold that for some amount of a loss or small gain. Didn't amount to much either way. And then haven't really thought about it. And then it's like, well, with the yield curve and not being, or what's the word? It was inverted, so then it's reverting, however you want to call that. But then ever since they started cutting rates here in the U.S., the long end's been going up. So that's interesting, and that might be good for banks. But then you could ask, well, why is that happening? And so on and so forth. And then is the threat of inflation coming back? Because I said some time ago, wouldn't it be funny if they start cutting rates and then mortgages go up? Because that could happen if the market doesn't think that inflation's actually beat, and by cutting interest rates, you're stoking the probability and increasing the confidence around inflation reflating. And I don't know if that's why they're gone up, but they went up, so I guess I got that call right. Made no money on it though, so whatever. And so it's like, okay, so if that's the case, maybe you could say a healthy yield curve would be good for banks, but then the question then becomes, what happens if they actually have to start raising rates again? And then, it just goes down into all this philosophical pontification, and I don't know ultimately, Trump's not going to allow that and blah, blah, blah. It's like, well, I don't know. And then it's more of these banks kind of making, I think JP Morgan's up 35 or 45% this year. It beat the S&P. So, I don't know. That's enough with my ramblings for this week. I want to honestly just, well, it doesn't matter. It doesn't matter. Okay, thank you for watching, and until next time.